Ladies and gentlemen, if I might direct your attention onto this lovely colored screen in front of you and look at the bottom row, you'll notice Euroclear right in the middle, a series of countries all boxed up into one service provider, Euroclear. So, Joe, can you quickly tell us how is it that Euroclear serves these countries? You're operating as both a CSD, a depository, as well as an agent bank, and I believe you also have some interoperable links for the traditional shares with people like DTC, Clearstream, and others. How does this work? Thank you.
Okay, just in a nutshell. So if you look at the Euroclear group, today we run indeed what we call the local securities depositories for a number of countries. So we do that in the UK market, where we have the EY system. We do that for the French, Belgian, and Dutch markets. And then, of course, we have two markets in the Nordics, which is Finland and Sweden, and we also have Ireland. And then, on top of that, we have the Euroclear Bank, which is the international securities depository, which, on the one hand, takes care about the Eurobond side. So you have Euroclear, you have Clearstream, and then out of that, of course, we have over time developed sort of a significant role on the fixed income side for the European markets. But as you say, Robert, we are indeed connected to a number of markets worldwide, sort of 45 to 50 markets, and further expanding. It's true, I think, in coming on interoperability, when you go back a number of years, and they used to have on the ICSD side, we had Euroclear, we had Clearstream, and there wasn't a lot of interoperability between both platforms, and we had what we called at that time the overnight batch. Yeah? And then gradually we started to introduce more and more interoperability. So we had settlement exchanges during the overnight, then we added to real-time batches, and so batches during the day, gradually into real-time. And over time, I'm not saying it's entirely corrected, because of course there's a difference in quality of services, but in the end it doesn't matter really whether you are on one side or the other of what we call the bridge. Whether you are on the books of Euroclear or whether you are on the books of Clearstream, you can interact and settle efficiently against the counterparty, either on the same platform or against the counterparty in the other system. Then comes, and so that is what we call the sort of commoditization of settlement, taking away those barriers, and probably target to securities will put that even at another level, where you have even more interoperability around Europe. Then comes clearing, and clearing to a certain extent even takes away the problem even more, because clearers not only tend to clear, they also net settlement. Yeah? So the problem further reduces in terms of the number of interactions you need between different platforms. Of course, the danger of introducing clearing, apart from all the risk mitigation, is that clearing can end up in a silo, where we see particular countries seeing that part of the vertical silo from trading, clearing, settlement into custody. And for us it is extremely important that we keep that open model, because what we want to offer to our clients is that they are able to manage their assets, that they are managed their collateral, which is for me a very important component going forward, that they are able to manage that with their infrastructure of choice, and that they can indeed serve a multiple of trading venues and clearing venues in Europe, but also around the world.
Thank you. Well, just to follow on that collateral point, there is a pilot initiative that Euroclear has been leading called the Pan-Asian CSD Alliance, where I believe Euroclear, the Hong Kong Monetary Authority, and Bank Negara are doing a pilot with, I believe, the central banks of Thailand and Indonesia following. And just at very high level, it seems that Malaysian debt, which may not be traded on a regular basis by lots of international investors, might suddenly become on the eligible collateral list through some of these linkages you're offering globally. Can you tell us a little bit about the Pan-Asian CSD Alliance? Thank you.
Yeah, so we indeed announced this sort of pilot where the idea is to introduce a hub in Asia, and we do it indeed with HKMA and Bank Negara Malaysia, I think in total there are something like 13 different central banks and CCP also involved in the project, and it is indeed to leverage basically the Euroclear bank infrastructure. What we've basically done in Europe is to sort of roll out together with those entities locally a hub for the region to ease the cross-border settlement, as we do in Europe, to make that interaction more easy. Euroclear Bank will also act as sort of the international gateway to the region and from the region back into other countries. And then on that initiative, we will indeed look forward to introduce collateral management, because we have developed in Euroclear, in particular on Euroclear Bank, a quite sophisticated tri-party collateral management system, which we are now opening up in terms of architecture. So we are no longer using that only for Euroclear Bank. We have used a similar technology, or the same technology basically, for introducing collateral management for the ISIS markets. And so we will look forward to replicate or to use that technology for the Asian market. And in fact, last week we had a conference in Paris where we also announced even one step further to use that technology with agents. And BNP Paribas Security Services is the first one that will use that technology. So we will no longer have collateral in a particular market, but we can leverage then also the network that some of these agents have.
Thank you very much, sir. Hugh Brown from EMCF, please come and join the stage. And while Hugh is coming, just one additional question, sir. We were talking earlier about the increased and substantive interest in trading Russian exposure. And I understand there may be a model that Euroclear is offering to allow those trading the underlying Russian shares on MySex RTS potentially to settle in Euroclear. Do you have any insight on that model, please?
Yeah, so for us, we are indeed developing the link into Russia, both on the fixed income and the equity side. A big element or a big component for that success was the new CSD law and the recognition of the foreign nominee concept. And we are looking forward around the fourth quarter of this year to make those Russian securities Euroclearable, yeah, and that indeed should normally lead to a substantial inflow into that market. Maybe taking away some, as you said, of the depository receipt activity in EUI, but guess what? It's also in the group.
Very good. Thank you very much. Well, Hugh, I'm about to come on to a question, but may I also invite Urs Wieland, the Chief Executive of 6Xclear, also to come on down. And Hugh, let's just take a look at the next two slides. The first one from the London Stock Exchange Group, which is a very simple trend analysis that we see on many exchanges worldwide. On the left side, you can see the years, 99 to say 2008, which was the peak of the equity activity. And if we look at the far right column, we'll notice the value traded on order book from 99 to 2008 grew about 6 times in value. But if we look at the middle column, the number of trades has gone up by 35 times. Why? Because the leftmost column, the average value per trade, has shrunk something like 90%. And the insight is that if we as an industry do nothing, it costs us more year on year to process the same value of trade. Interestingly enough, one of the solutions, without imposing switching costs on the member, have been to introduce a choice of clearing, interoperability, which comes to the next colorful picture, which, just to describe this briefly, if we look down the left side of this chart, you will see the names of a number of central counterparties you'll recognize. CC&G, the Italian CCP, part of the LSE group. EMCF, with our distinguished Hugh Brown on stage. EuroCCP, owned by DTC. LCH ClearNet, the same corporate entity with Limited UK and SA France. Oslo Clearing from Norway. And 6Xclear, represented by the Chief Executive, Urs Wieland. Across the top row, you'll notice London Stock Exchange to Burgundy. The ones in colors, BATS, Chi-X Turquoise, are the new entrants. Some of the dark pools, including UBS, MTF, and some others. And where there is a blue box, a central counterparty is either live or will soon be live. That means under the London Stock Exchange, and by the way, Hugh, you had many years of distinguished service leading within the London Stock Exchange. If you look under the UK line, there is a choice of London Clearinghouse and 6X Clear. It's also interesting to note, to the right of turquoise under the Swiss Exchange, there is also a choice of LCH and 6X Clear. And what that means is one can trade something like Nestle on the Swiss Exchange and choose to clear either in XClear or LCH. And then trade on the London Stock Exchange Vodafone and choose to clear in LCH or XClear. And what's happening is across the horizontal, as more of these blue lines are connecting, international investors get economies of scale. So Hugh, let me come to you first, because if I ask you a question first in your context of the London Stock Exchange, and then I'm going to go on to the successive EMCF. 2003, we had the introduction of choice on the Swiss Exchange. 2008, on the London Stock Exchange, a choice of central counterparty. And yet we went through the biggest crisis in the history of the financial markets. At the London Stock Exchange, how did things perform?
Thanks, Robert. I think, yes, Robert highlights the beginning of interoperability at my old job that I left in summer of last year, but did have oversight of a number of the interoperability arrangements there in central counterparty.
Sorry,
the system...
Just a simple answer, because I'm going to come on to you for another
Okay, the system worked fine.
Worked fine. Now, just as a nice follow-on, NASDAQ OMX is also, I believe, a 22% owner of EMCF, and EMCF, as the central counterparty for Chi-X, BATS, a number of MTFs, I think currently is doing more number of tickets than any clearinghouse in Europe. Is that correct?
Yes, we've grown from less than 5 years ago to be the largest equity CCP in Europe.
Very good. And Urs, if I might just bring you into the conversation, what's interesting is now that we have Swiss Exchange, London Stock Exchange, UBS MTF from July last year, turquoise, BATS, Chi-X, the total sum of all the value in developed Europe has now seemed to have hit a milestone of half of all the developed European value trading on exchanges, or MTFs, that are going through interoperable models. What is your message, Urs, to the other markets that are considering introducing a choice model? Is it technically very difficult to implement versus the benefits it gives?
No, definitely not. So based on our experience which we made, the initial effort which we have done a couple of years ago, that was a huge one. So, but as long as you have one interoperability link in place, you can leverage your efforts which you have done in the past. So in other words, all the CCPs which are at the moment interoperable, it is 4 at this time in Europe. It's ourselves, it's LCH, you mentioned that before, it's EMCF as well as EuroCCP. So all these CCPs made its efforts in the past, and therefore adding a new link is not a real huge issue. What you have to solve is the regulatory approval. This is a separate task. You have to solve then also different things like rule book changes, all these things. But this is always on the legal side. From the technical point of view, it isn't a huge step. And interacting with co-CCP is also a quite small thing to achieve it. We have all generic agreements in place between the CCPs, and therefore it's not a real issue now. It isn't.
Thank you very much. Hugh, so let me come back to you and give you the chance to give a more complete answer. Now that EMCF has opened up to choice, and EMCF is the clearing incumbent in NASDAQ OMX, as well as Chi-X and BATS and others, are you now still the majority of activity on those platforms?
Yes, we are, Robert. Thanks very much. We are still the largest equity CCP in Europe. The point, though, I think on interoperability is we have opened up on BATS and Chi-X. We are due to open up on NASDAQ OMX as well with our colleagues over there. It's key with interoperability that other markets open up as well, though, so we are looking forward to getting Turquoise very soon. We're having very good discussions with them. With sets as well. I think LSE last week said they renewed their commitment to horizontality, and we look forward to serving them. Swiss Exchange, currently served by us, and indeed your own UBS MTF, Robert. We're very looking forward to being able to bring the benefit of our customers and service to them.
Well, thank you very much. So I think what's very interesting about the data points and messages to exchanges worldwide is that in every example we've had so far, the incumbent CCP still retains majority of activity. The vast majority of members tend to stay with the incumbent even when there is choice offered. But clearly, the amount of benefit in terms of bringing international flow from those members that are dynamic to accept choice must be something that could be welcomed.
I think you're absolutely right, Robert. It's one of the things that strikes me on the interoperability, say, with LCH going out now to the MTFs. That's giving London Stock Exchange Group's core customer base, who are tied up to that, an easy access to other markets. If we were to provide services for LSE, then that gives LSE the ability to attract new customers, our customer base, who've blooded themselves on the MTFs in Europe and do bring a more efficient way of trading. And I think new CCPs to new markets can bring benefits.
Thank you very much. I'm just going to refer to a question from our distinguished colleague from iShares earlier about exchange-traded funds, and maybe just share an observation. We heard from Seth this morning that one of the strategies exchanges should think about is diversification. And that can be by geography, trading an exchange-traded fund in one country to give exposure to someone else. So for example, I think iShares has IFC and IFX and IFC, which are two exchange-traded funds, one trading in America, one trading in Europe, that have exposure to underlying China shares. Mathematically the same. But what's interesting is that we can trade those basically in a separate time zone to the home market. Now, ladies and gentlemen, if we look at this picture below, the insight in Europe is that we have now solved the puzzle on how we can trade the same stock, the same share, in two or more countries and settle it in the home market depository. Just as an exploratory question, and I'd like to also bring in Euroclear to this perspective, if we were to move outside of the traditional time zones when a home market is sleeping, might it be possible to continue to do that final batch process for settlement? So allow me to ask this question in parts. Urs, to you first. In theory, how many hours out of the day can 6x Clear operate and do, say, real-time intraday risk management?
Well, the system itself is only closed by 90 minutes during the day, and the rest is open. That means we are able to accept trades across more or less, it's not 24 hours, it's maybe 22 hours or a little bit more, but in general we are able to accept the trades at any time during the day. So system works also during the night. The 1.5 hour which I mentioned is just for our end of day process, and the rest is open. So we can accept trades from each and every time zone at any time, as long as these markets are locally open.
Very good. Is that also the same for EMCF?
I'd have to check with my technical eyes for the absolute, but what I do know is that our system runs on a kind of continuous near-time batch process, so there's no overnight batch that it needs to worry about, so it can theoretically 24/7 or at least 23 and a half, 6 shouldn't be a problem. I'd share your point on liquidity of global stocks, though. It's always struck me as slightly odd that you can bet 24/7 in the same place on Manchester United winning the Champions League, but you can't do the same with BP.
So let me then come, Joe, to you. If a central counterparty could operate, say, 22 or 23 hours a day and then deliver that matched message to you as Euroclear as a CSD, would you be able to accept and process within that 24-hour period, even if it was 22 hours into the day?
Well, if I look at the just on the Euroclear system itself, coming back on the on when we are open, today we have two processes. We have a real-time system which runs sort of 2:30, that's Brussels time in the morning, and that runs throughout the day, real-time till 7, 8 o'clock in the evening. And then we have 2 overnight batches where we settle a lot of the activity for the next day, and where we also have the exchange with Clearstream. Now, the reason why we still have that overnight batch, which we are considering anyway to sort of gradually not decommission, but have the more real-time 24-hour system, one of the things you cannot forget about overnight batch is credit. We settle a lot of activity, which is between 1 and 2 trillion a night. Yeah? If you would do that on a real-time basis from a credit perspective, there are things that you need to look into. But so, going forward, yes, we can, if you would have a match trade coming in, we would be able to settle that. Of course, you need to take into account from a cash management point of view, depending on which cash these instructions need to settle, whether that cash currency is open or not. But yes, we could, I don't see any problem of doing that. Yeah.
Very interesting. I mean, the observation has been made, for example, in the developed currency markets. Instruments can trade 24 hours a day and they settle in one place, which is CLS Bank. We've just seen from the Boca Raton FIA conference the updated announcement of Brazil, Russia, India, China, and South Africa announcing they'll be cross-listing their futures. But even some of the core futures are trading broadly 24 hours and settling in one open interest in the clearinghouse. So interesting question from an exchange-traded fund and maybe an underlying share perspective, whether it might be an opportunity to diversify by geography. Ladies and gentlemen, any questions for our expert panel? While you're thinking, oh yes, Brian Taylor, thank you.
What is the chances of getting interoperability into other asset classes like fixed income or derivatives?
That is an excellent question. Actually, I see the CEO of Vega Chai in the audience. We heard this morning, if you don't mind me just putting you on the spot, Matthew, bring the panel over. I believe you mentioned that your clearing model today is like a central clearing model with BNP. Do you think, from a multi-asset point of view, it's possible to explore into a clearing and interoperable model?
Absolutely, and it's something that we have looked at in the past and continue to look every month or so. I think the main issue, just to maybe flag something very particular, is the fact that we, as a buy-side to buy-side focused MTF, have a lot of what I would consider traditional local-only asset managers that unfortunately they don't have currently the links into a CCP via, let's say, a GCM, as they use typically a lot of custodians. Without a question, all fixed income participants would welcome what I call almost like a full migration of fixed income trading into a CCP. This is not only because of headlines coming from the press, the regulators, the central banks, but rather the risk management departments more than anything else. But I think until there's a solution which will allow every buy-side institution with in some way to participate in the CCP is in place, that remains the biggest obstacle. So until that is solved, I think, unfortunately, probably the migration of fixed income electronic trading into CCPs will be a bit slow.
Very interesting. It is interesting to note on that market map that LiquidNet, which does serve the buy side, has actually chosen a central counterparty. I think they chose yours, right, on 6X here. Actually, Hugh, EMCF, I think, does clear multi-currency. Is that correct? Multi-assets.
Yes, absolutely, we do. So we've got some structured products that we launched back end of last year. Our system is multi-asset class capable, and so it does have derivative capabilities. Going back to Brian's specific question, there is fixed income clearing interoperability in existence in Europe with MTS Italy between CC&G and LCH ClearNet SA. So it's perfectly possible, and I think with derivatives the issue is longer timelines of positions being there. There's no technical reason why it can't be done, but maybe something more like position transfer achieves as much with less effort.
Thank you. And Urs, from your perspective, today in the equities world, you do shares, depository receipts, exchange-traded funds. Does 6xClear do any other asset classes, say through the Swiss exchange or others?
Yes, what we are offering is also the fixed income segment in the Swiss market, and I'm completely in line with you. I don't see a reason why interoperability shouldn't work on the fixed income side. To be honest, to say that the link which you have mentioned before is between LCH, Euroclear and SA and CC&G is not a real interoperable link. It's some kind of cooperation between the two companies. But in general, it is most likely that also on the fixed income side an interoperable mode is possible. It is more difficult if you would like to expand the product to derivatives to the derivative space, which is then more complex, based on different duration, different risk profile. All these things must be solved, and this is not so an easy task. But for cash instrument in general, it is possible. There's no problem about that.
And Urs, just a quick follow-up question: are you also able to do things like repos, carbon credits, and others?
Not at this time, but we haven't such a project in Switzerland. Unfortunately, our central bank came to the conclusion that it is not the right time to implement it. In general, we are ready to go also for repo clearing. That's not a question about the capability of the system or the knowledge. All this is present, so it's just a question of if the market is requesting for it or not.
Well, it is interesting for both of you that the regulators did do a very prudent review of interoperability and came up with a model that said it would be safe. It seemed the model was a form of the CCPs putting up collateral to each other in a pledge account somewhere else. So in the unlikely event a CCP went down, client money would be at risk. Can you just maybe explain that model, how that works, and why we should feel comfort with it?
Of course, thanks for the question. It is something which came up when we started the interoperability link more than only between two companies. The regulators came to the conclusion that the exposures between the CCP should covered by independent collateral. So you can be in favor or not of that solution. It is something which came out from a regulatory decision. A CCP, just a general remark here, a CCP will never have its own position. CCP's positions are always reflected by its client position, and these positions are covered by regular collateral and default fund contribution, the whole waterfall of resources. Nonetheless, the regulators would like to have a solution in place which covers this in the CCP exposure once again. How it works, what we have implemented, we had once again a generic legal framework in place between the interoperable CCPs. We have chosen an independent body which is acting as our collateral manager. It is it was an independent. It is an independent one. So what the regulators are asking for is it must be independent, and it must be either a CSD, ICSD, or a central bank. And we had some discussion which one was the right one, and we came then to the conclusion that someone else, which no one has a direct relationship on it, is the right one.
Thank you very much. So it's very interesting. It's safe, it's simple, it works, it's easy to implement. I just want to pay a quick tribute to Graham Dick, because he was one of the key drivers for introducing interoperability, given Chi-X was the big order book in Europe. But let me come quickly back to you, Joe. From an international perspective, Euroclear is operating worldwide, is that correct?
Yeah.
Very good. And I understand, Urs, are you also expanding outside of Europe in terms of extending the choice model?
That's true, yes.
Can you give us a bit more color?
Yeah, of course. We are now in discussions with Chi East. The joint venture between Singapore Exchange and Chi-X Global. It's an MTF which is located in Singapore, and we expect to go live somewhere in the third quarter of this year, and offers then interoperability also for Chi-East. To be honest, it is not the end of the message. It's quite obvious that if you are starting our business in the Far East, that we would like to expand it in the whole ASEAN region. The ASEAN region is similar what we had in Europe a couple of years ago. So it is a highly fragmented market. You have to go to each and every regulators, has to speak with each and every exchanges. It is something similar what we have here in Europe, and we believe from Euroclear point of view that this is a growing up market and will create additional benefits as well for our clients, and at the end of the day also for us.
Well, thank you very much. Another question from the audience. Yes, I'll see.
Given that the design of the interoperability model was put together before 2008, given what we've seen in 2008, what was the single most important thing you'd have put together differently, knowing what you know now?
Well, I think, interesting, that's an excellent question. I think the prudent review by the regulators, the Dutch, UK, and Swiss regulators, looked at that framework and came up with a revised framework that was published in 2011 in the beginning, and then the CCPs suddenly implemented the follow-up. Hugh, did you want to give a quick?
Yes, just to add to Robert's comments, the system that was there before did not require any contribution between the CCPs to manage the risk between the CCPs, because they were seen to have flat positions and to be fully collateralized against customer default. Post 2008 in the regulatory review, the regulators said, you are introducing some new risk into the system, albeit that it might not be market risk, it's operational risk, it's human risk, and if there is more risk in the system in this environment, post 2008, we want more collateral. And so that, I think, was the primary justification behind which they came up with us swapping collateral and new collateral between us.
Thank you. Another question from the audience. Excellent. Excellent question. Yes, question just behind you, Brian Taylor.
Is that collateral that is swapped client collateral, or is it put up by the CCP itself? And if so, what is the risk on the CCP?
It's a mixture, Brian. So I think all the CCPs collect at least a large proportion of that collateral as new collateral from the customers, because theoretically, otherwise the CCP's resources could be exhausted. But I'll hand straight over to Urs for an opportunity to say what he does, which is a little more.
Yeah. Urs is completely right. I know. No, seriously. The condition from the regulators was only that it must be an independent source, irrespective from which side these sources are coming from. So it is most likely that the CCPs goes back to its client and asks for that additional collateral. What we have done in our own framework in 6X Clear, we share that 50 by 50 from our own capital and reserves and collateral, and ask 50% from our client side. But each and every CCP is in general free how he would like to solve that problem. Another condition was that the whole framework must be scalable. Scalable in terms of number of CCPs which will join in that model, and also in terms of the number of trading platforms which you are offering your services under that regime.
Thank you very much. So ladies and gentlemen, I'm just going to close with a final illustration. If you look at the slides, you'll notice that this is the market map of interoperability, but here's a real-world case study, just our little tiny UBS MTF. There are about 15 or 16 external dark venues in Europe. And what you can see at the left and across the row in blue is the actual ranking out of these 16 venues. What you'll notice with the red lines is after we were able to go live with interoperability, the regulators said, okay, on the 22nd of July, we were able with our partners to go live on the 29th in a week. We saw a significant jump up in activity. In fact, it's probably even better if you look from our launch. We only launched in November 2010. We were ranked roughly 9 all the way through. We got to July. You'll remember the volatility increased in July. Order book activity correlates with increased volatility. We more than doubled our activity, all-time record month, and still only ranked number 9 because rising tide lifts all boats. But with the choice, we found we were able to onboard members more quickly. The incentives and scale that our members got from other players seemed to help, and we seemed to have a very positive result. So the key reason for showing this illustration is, ladies and gentlemen, do not be afraid. Please talk to these experts on stage and the other CCPs. Having choice to allow members with different profiles to have more affinity with one clearing model without imposing switching costs on the others is a way to contribute to growth, which in fact, ladies and gentlemen, is the whole theme of this World Exchange Congress as we come up with all sorts of innovative ideas. Ladies and gentlemen, we've had a fabulous first day of the World Exchange Congress here in Istanbul. We thank you very much for your very dynamic interaction. And ladies and gentlemen, I will hand over to Matthew Pullen, but first, let's thank our excellent distinguished panel. Thank you very much.